All right, and we're live. If you have been in the live chat waiting for this interview with John Rubino to go live, thank you for your patience. We had a little bit technical difficulty there at the first, but third time's a charm, or specifically third device is the charm. We went through John's laptop, his cell phone, and now we got his tablet, and the tablet actually worked for the live software that we're using to record this. So folks, okay, let me set some quick context, and then we'll get John started. But I guess real quickly, John, I should just introduce you. This is John Rubino, author of the book The Money Bubble, who was founder of the website dollarcollapse.com, which makes him a great guest to talk about today's topic, which is global de-dollarization. Hey, John, how you doing?
Hey, Adam, I'm a little stressed out now after the last half hour of trying to get my laptop. But yeah, so sorry for the inconvenience, everybody. I think the problem was at my end. I need to buy a way better laptop, it looks like. But
well,
and anyhow,
I surprised you with some new software, so the onus is on me. But anyways, John, let me set the context here, and then we'll jump right in. But thank you for persevering through all those technical difficulties to join us today, because you are a great expert for today's topic, which of course is de-dollarization, which is suddenly in all the news headlines. It's funny enough, this week both CNN and Fox News, both sides of the ideological spectrum in the media world, ran basically segments on this topic. And it's a process that's been going on for years. The world has been slowly starting to wean itself off the dollar here. But as you and I have talked about previously, John, the invasion of Ukraine, and specifically sort of America's response to it by weaponizing its financial system, has really seemed to accelerate the process of de-dollarization here. And over the past couple of days, weeks, there's been a bunch of new trade deals that have been announced by major countries agreeing to settle transactions in currencies other than dollars. And these were transactions that for the past bunch of decades have only been in dollars. We see a number of global central banks diminishing the percent of dollars in their holdings of in their reserve holdings. So I guess the question for you here, John, is this just sort of an extension of what's been going on for the past couple of decades, or is this like a new phase here where the U.S. may be on its way to losing its reserve currency status? And if so, what's sort of the timing of that, do you think, and what would the implications be? That's what we're going to talk about here today. But thanks so much for joining us, my friend.
Sure. Thanks for having me on. And since we're live, I need to start by apologizing for the barking dogs you might hear in the background that you won't be able to edit out. So if that happens, that's life here. But yeah, actually, this is what's happening now is kind of what you described. Both of the things you described is something that's been a long time coming, and it's something that is happening very quickly all of a sudden. And the roots of it stem from the fact that the U.S. has been the world's monetary power since at least the 1970s, and really since after World War II. And instead of being a benevolent ruler, we've been a schoolyard bully. We've used our monetary system and the fact that we have the world's reserve currency and we control the multinational financial institutions as weapons. Anybody steps out of line, and we'll kick them out of the SWIFT bank settlement system, or we'll confiscate the bank accounts they have in New York or London or wherever, or we'll flat out invade their country and kill their leaders. We've done all those things, and everybody's aware we've done those things. There are still a few people in the U.S., mostly people running the government now, who still think we're the good guys in the world. But most of the rest of the world doesn't see us that way. They see us as kind of a malevolent and not very bright force in the world that's causing more trouble than problems that it's fixing. And so they've been waiting for a chance to break free from dollar hegemony for a long time. The whole BRICS idea, the Brazil, Russia, India, and China coalition goes all the way back to 2010. And nothing really came of it other than China and Russia buying a bunch of gold along the way. But all of a sudden, and yeah, I think you're right that the Ukraine war had a lot to do with it here, because basically, from the point of view of most of the rest of the world, the US picked that fight by forcing Russia, by expanding NATO to Russia's borders and forcing them into it. And then they, first of all, they confiscated a bunch of Russian assets that were in banks in Europe. And they fed so much money and so many arms into Ukraine that the war has gone on a lot longer than was expected. And, the attempt is to drain Russia dry and basically take them off the chessboard. So everybody sees this. And they're thinking, wow, God, if Russia, if this could happen to Russia, then who's next? Are they going to come after me next? So it's becoming a lot easier for different countries to justify breaking away from these rules that we've had in the past where you could only buy oil with dollars and most international trade had to take place in dollars and your central bank reserves had to be mostly in dollars. And, none of that's true anymore all of a sudden. And we're seeing a number of really dramatic things happen right now. And let me stop there and then we'll get on to the dramatic things as we go along.
Okay, well, look, I think both you and I had sort of pulled data in advance of this conversation of some of the announcements that have been made recently, just to give people a sense of, which specific countries are involved and what decisions they're taking here. I guess, do you want to start with your list first? Or do you want to go through mine? I don't know if you still have yours in front of you, given the scramble that we had before, but.
Yeah, I printed it out. I've got it right here because there's so many names here that you can't really keep all of this in memory just because so many countries have all of a sudden decided to either join the BRICS coalition or are talking about it or are cutting other trade deals on the side. And so, first of all, the two big names that have applied to join the BRICS are two really serious names. Saudi Arabia, which is the biggest oil exporter in the world, and the country that is basically responsible for the whole petrodollar dominance in the past 30 or 40 years. And back in the 1970s, we cut a deal with them in which we agreed to basically make them impregnable. We were going to protect them no matter what. And all they had to do was refuse to take any other currencies except dollars for their oil. And that made the dollar the one indispensable currency, yada, yada. And that's basically held until just lately, where now Saudi Arabia is joining effectively an anti-dollar coalition and is making it known that it's willing to take other currencies in return for its oil, which means basically the petrodollar is dead. The other big name is Mexico. I mean, Mexico is right here. It's basically in a lot of ways, our manufacturing base. Demographically, Mexico is in the perfect place for a U.S. partnership because they've got a young, hardworking population, which very few other countries do, and they're very productive. We can set up a factory there. That's part of the onshoring or friendshoring trend now, where you bring back your manufacturing to your own shores. Well, for the U.S., we really like to bring it back to Mexico in a lot of cases because it's way cheaper to produce there and it's perceived as safe. Well, now Mexico is joining this coalition that is not friendly to the U.S. and the dollar. And there's a bunch of other countries too, but you get a sense of how big this is when these two countries that we kind of thought we had in our pocket are now definitely out of pocket and are definitely doing things that can't help but hurt the dollar in the intermediate term and definitely the long term.
All right, John, if I can just probe on both those for a quick sec. So I mentioned that CNN and Fox News both ran segments on this in the past 24 hours. In the Fox segment, they had former Assistant Treasury Secretary Monica Crowley, and she basically said if we indeed lose the petrodollar, that would have, quote, catastrophic implications. She basically sort of talked about an implosion, a financial and economic implosion resulting from that, and of course, a loss of reserve currency status and all that. So she was, she wasn't beating around the bush there. She said that was kind of like a nuclear event for America if indeed the petrodollar is lost. And my understanding of the petrodollar deal that was struck with Saudi Arabia was that, hey, we will fund your defense Saudi Arabia. So you basically are going to be protected by the military shield and might of the U.S. So if Saudi Arabia is potentially breaking the petrodollar, I'm just curious, do you have any idea of how they're going to supplement, if the U.S. gets angry and then therefore retracts its military protection, do they know who's going to step up and fill that gap?
Well, that is, probably the third biggest story in this overall story here so far. And China just brokered a peace deal between Saudi Arabia and Iran. And Iran was the big risk for Saudi Arabia. They're on two different sides of the debate within Islam about how that religion should be run. And they've been at each other's throats forever. And if they're going to make peace and they're going to partner with China as part of this process, then Saudi Arabia really doesn't need the U.S. as protection because its main enemy is now its friend. And it's got China over there helping it build things and create a manufacturing base or at least buy a lot of oil, whatever. So not only has Saudi Arabia killed the petrodollar, but it's basically, to an extent, pushed the U.S. out of the Middle East. What's our role there? If Iran and Saudi Arabia don't want us there and they're partners with China, it's not clear what we're doing over there anymore because Iraq is sort of an Iranian, I don't want to say puppet state, that's too much, but they are in a position where Iran has a lot of influence within Iraq. So you take them off the table, and what's the point of a U.S. presence in the Middle East other than guaranteeing Israel's security? And that doesn't have much to do with oil in the long run. So Saudi Arabia has basically cut a series of deals that makes the U.S. unnecessary there. And that's an earthquake. The woman you were quoting didn't overstate the stakes here, because if you take the petrodollar out of the equation, then a lot of other countries no longer need to hold as many dollars as they currently do, because they don't necessarily need them to buy oil. They can maybe use their own currencies or some other currency of another country to do it. And what happens to those dollars? Well, they're probably in the form of treasury bonds, treasury paper, with the central bank in a given country. And that central bank is liable to lower the dollar's role in their foreign exchange reserves by selling a lot of treasury bonds, which does two things. It pushes up interest rates and lowers the exchange rate of the dollar. So this is, to say it's an attack on the dollar is probably overstating it, but it's definitely putting downward pressure on the value of the dollar and is forcing us to live within our means. We're the biggest debtor country in the world right now, and we borrow between $1 and $3 trillion a year just to get by. And if all of a sudden we have to take, say, half of that borrowing and do away with it and start finding a way to actually fund the global military empire, the cradle to grave entitlement state, and the $1 trillion a year in interest that we have to pay on the debt that we've taken on already, then that's a very big deal. That's a massive cut in U.S. living standards in a country that's already wildly over leveraged. So, it's kind of like the Ponzi scheme story where it can function. The Ponzi scheme can function as long as there's a lot of new money coming in. But you turn off that spigot and the Ponzi scheme collapses immediately. So we're not in the worst shape in terms of debt and financial fragility in the world, but we still have our massive fragilities. We saw in the last week what happens if a couple of little regional banks get into trouble. That required the government to basically guarantee all bank deposits across the country, and that wasn't even a big crisis. So this is going to lead to bigger financial crises, and you can't know what they are ahead of time. But there's a lot of things on the list of potential financial crises that could flow from U.S. interest rates being pushed up and the dollar's value being pushed down, and that appears to be what we're looking at. It's not clear how that changes now, because everybody in the world has basically found out that they can get away with this. India can get away with buying Russian oil for rupees, for instance. And the US is going to complain a little bit, but we're not going to invade India. We're not going to send the CIA in to try to destabilize their government. And they see that now. And so they're free to do what they want. And what they want is unfavorable for the US. So there's our decade. The world is kind of like on a playground when everybody just decides to turn their backs on the bully. The bully doesn't have anybody to play with after that. And is kind of wondering what happened and why it's happening. And I think the US is in kind of that spot. The guys in charge of the country still think they're the good guys and still think that 5% of the world's population should be able to control the other 95%. And they're finding out in a hard way that none of that is true. And I don't think they're going to take it well.
So, regime change tends to happen quickly, right? Where everybody sort of, kowtows to whoever's in charge up until the moment that they no longer fear them, right? To use your bully analogy, right? And then all of a sudden, the power dynamic shifts and you have a new regime going forward, right? So is this like, are we witnessing a watershed moment here, or are these just sort of like cracks in the dam, but the dam hasn't yet fully burst open?
The cracks just started forming recently, and they're getting bigger at an accelerating rate. So it could be that we look back on this as the month that the dam broke. We'll have to see how fast things progress from here, but it's clear to almost everybody that they don't have to worry about the US so much anymore. In that sense, the Ukraine war actually backfired because it was designed by NATO, which the US is in charge of, to drain Russia and to make them an irrelevancy in geopolitics. And it kind of had the opposite effect. It's draining us. We're spending a ton of money on Ukraine. We're sending them, a lot of military gear that we could use for other things, presumably. And it's making us irrelevant while Russia is still finding plenty of buyers for its oil. It's not in that bad a shape financially, and it's gaining more partners all the time. So it looks like, and sometimes when there's a war that shows an empire to be a paper tiger, that happens a lot in history where everybody's terrified of, the British naval power or whatever, or in this case, US financial/military power. And it turns out that those things aren't the overwhelmingly unbeatable things that we thought they were. And then everything changes. So this could be the point in history when that happens to the US empire. And, it really depends on how we respond to that. It could be, for instance, the British Empire just kind of faded into second tier power status without fighting a gigantic war in order to maintain power. And the US could, take some steps back and end up being one of the powers in a multipolar world, which isn't so bad. To be a strong player on a strong team is a good way to be. Or we could try to reassert our authority over all of these guys who are running off doing their own things, which I think is what a lot of the neocon psychopaths who are running the US government would like to do. They would literally like to fight World War III against Russia and China because they think that they'll win, quote unquote. How you win a world war against two nuclear powers is not clear. But I think there are a lot of people who are pulling the strings in the Biden administration who would basically love to see that. And so we don't know what their plans are, and we don't know what their ability to carry out those plans will be. So we're not out of the woods. In other words, we're not guaranteed a peaceful transition from a unipolar world to a multipolar world. It could be very bloody. It could be chaotic, and we'll just have to see, because so much of what's going to happen is going to be decided by people who don't really understand their situation, sitting around a conference table making decisions under extreme stress. And so really anything could happen from here on out, but we just have to pray that the transition is reasonably peaceful. and that it's not a financial catastrophe or a, God forbid, a geopolitical catastrophe in the next 5 years as we get from here to wherever it is we're going. Adam, I lost you there. I can't hear you. Can you hear me?
Yeah, I'm sorry. I was on mute there. So if this turns out to be a watershed event, I'm not saying necessarily this is the year the U.S. loses its dollar hegemony, but you said it could be. But for assuming for a second it was, you said sort of everybody has been, everybody else around the world, has been sort of looking forward to this moment where they're a little bit less under the thumb of the dollar. But one group of people that I think this would come as a huge shock to is Americans, right? I mean, it's like this is a topic that I think the average American has not had on their radar until potentially this week, all of a sudden. And if it ended up being that watershed event, it would really be like a 2x4 to the side of the head of the average American of like, wait a minute, what we just had, world currency dominance, and then all of a sudden now we don't. And as you said, there's a lot of potential implications that really come from that, right? I mean, if there's less need and desire to own dollars, well, then it's going to be harder to sell treasuries. Cost of capital here is going to go up. The value of the dollar is going to go down. And one of the great advantages that we had by having the world's reserve currency is we could largely export our inflation, right? We could make a lot more dollars, spend them, benefit from that, and the rest of the world had to kind of deal with the inflation as it rippled out into the rest of the world. We will lose the ability to do that going forward. So I mean, this really will have pretty seismic effects for the average American, if indeed the world continues to accelerate the weaning of itself off of dollars. I assume you kind of agree with all this, John, right?
Oh yeah. I mean, we can't know the details of this transition, but in general terms, it's really inflationary for Americans.
Yeah, exactly. Like we know the trends that'll kick off. We don't know yet how the exact magnitude, but we can kind of have a sense of where things are going to be heading.
Because remember, the BRICS coalition, as it's coalescing, with all the other countries that are joining or wanting to join, is going to have control over commodity pricing. And so we'll have the equivalent of OPEC, but not just for oil. It'll be for a lot of other crucial commodities that the U.S. needs. And if the guys who are selling those things are in charge of pricing, then prices are going to be higher than they would be otherwise. So that's very inflationary for just about any sector of American life. Manufacturing for sure is going to cost more going forward because we can't dictate prices. And that alone, I mean, let's say commodity prices give us 7 or 8% inflation, which is less than we had in 2022. But if it's that level of inflation going forward, that's incredibly destructive for a currency, because once people figure out that we can't really control the decline in the value of the currency, or that it's our official policy to engineer that kind of a decline, then people just lose faith in the currency. You get the crack up boom from the Austrian School of Economics. Everybody just gives up on the currency and dumps it. And it could be, and we were always heading for something like that, because we were borrowing so much money that there was going to be no way out except to do a massive currency reset, because financing all this debt was going to be inflationary. Well, now we have this other factor, besides all the debt that we've taken on, which is going to be inherently destabilizing and inherently inflationary. We've got the rest of the world now in control of big parts of the commodities complex, and we're going to have to pay more than we would have otherwise. So yeah, it's going to be one of those multi-crisis scenarios where it's not just one thing going on, it's a lot of things. And by the way, there's a couple of science fiction books by a writer named William Gibson, who that's the world he sketches out in those 2 books, and they call it the jackpot world, where how you're playing a slot machine and it comes up one thing, 1 pineapple, 2 pineapples, 3 pineapples. Well, and then it's jackpot. Well, that world has all the crises that we've been talking about for a long time happen all at once. There's a war, a geopolitical crisis, and a financial crisis, and an environmental thing, and we're kind of headed for something like that, where a lot of things can go wrong all at once, and it's really not clear. In those books, 80% of the human population is wiped out, and and the people that are around afterwards are basically ruled by what they call kleptocrats. In other words, an oligopoly of extremely rich people who can do anything they want to because they've got the good tech and they've got all the money. So that sort of sounds like the World Economic Forum's best case scenario. But we're heading for something like that. And, throw in the fact that there's a large number of elites in this world who would actually like to see massive depopulation in a hurry, and an oligopolistic class rise to basically dominate the global economy. So yeah, we're kind of heading in some very disturbing directions now. And again, the details are impossible to predict 6 months out or a year out or whatever, but it certainly looks like the broader the broader scenario is for these fiat currencies to finally stop working and to be replaced by some kind of a currency regime that's based on commodities that limits government's ability to just inflate themselves, military empires and cradle to grave entitlement states. But to get from here to there, there's got to be a series of big crises. And I think that's what we're heading into right now. And the whole BRICS thing is going to be one of the determinants of how fast this thing happens. And that we can't know, but it looks like you said, the dam is breaking. It's completely possible that this is one of those slowly at first, then all at once kinds of scenarios. And the dollar is one of the victims of the fulfilling of this process.
Interesting. God, so many different places to take this. And folks as well, I neglected to mention at the beginning of this, if you're watching live, we'll leave some minutes at the end here for me to grab a couple of questions from the live chat. So we will give a few of you, as many as we can grab, an opportunity to ask questions here. All right, John. So I'm gonna try to help people pull their heads out of the oven here after your rosy view of what may happen here. But it's interesting. You and I have been talking about the everything bubble for a long time, right? And I could hear what you're saying is the everything bubble may end up morphing or metastasizing into the everything everywhere all at once crisis, right?
Yeah. I mean, or not just one single crisis, though, different crises in different places, each of which would be seen as existential when it happens, if it just happens by itself. But, we could easily have a banking crisis across the developed world. We could easily have commercial real estate tank, pension funds tank, governments be unable to finance themselves. All of this stuff could happen at the same time. And of course, war is an ever-present danger in this kind of a situation, because even without the U.S. being run by some really strange, bloodthirsty people, it's normal during a crisis for a country to look abroad for an enemy that they can use to distract their people from the domestic mismanagement that's going on.
Right, or to use war to make a play for resources, as some think. That's why Russia was really going after into Ukraine, was to secure some key resources. All right, well, look, I've got a couple of key questions I want to make sure we get on the plate here before I tap the audience. One is, let's see, which one to start with first. You mentioned that we're going to have this sort of BRICS coalition that is going to increasingly control the production of global commodities, right? And it's going to be harder for the U.S. and the West, or what I like to call sort of Team America, to get. It's going to be more expensive for them to buy, and part of that's going to be because the supply is going to be more constrained than we've been used to, right? So forever, we've been used to buying everything with dollars and being able to basically outbid the rest of the world for whatever commodities we wanted. as Zoltan Poznar, the Credit Suisse analyst, has been saying, the supply of global commodities is becoming increasingly encumbered, meaning it's being promised by like one BRIC nation to another BRIC nation. And so when America shows up and says, okay, I want to buy them, they're saying, okay, but we might not have everything you want to buy, America, and maybe someday it's going to be, and we might not even take dollars for it. I mean, we're not there yet, but that's where things could go. A pushback I've sort of heard about this is people say, hey, like, let's talk about the countries you're talking about here. China, Russia, like these are not countries that people have a lot of, decades of history of trustworthy behavior with. And it's sort of like the honor among thieves argument, right? Which is like, are these guys going to really be able to hang together as a coalition in the long run? Or, are they going to be opportunistic and kind of stabbing each other in the back when they can to get a better deal and whatnot? And is this something that might look like a compelling confederation to counterbalance the dollar, but in reality and in practice, it might kind of fracture over time because it's just not a team of allies who can really count on each other. Especially maybe if America starts switching from guns to butter, in terms of its international relations.
Well, yeah, the idea of a multipolar world is not something that ought to be peaceful and lack drama, because when you've got 3 or 4 different powers out there, and it's not clear who's the dominant one, and they're all run by people with very powerful egos and a real desire to make their country known, it's going to be messy. And you could make the case that a unipolar world where you just have one kind of dictator out there, like we have had up until just lately with the US as the world's policeman, that for all its faults, it's actually a better system. But a unipolar system does have faults, and eventually it breaks down. And a multipolar system is more normal for the world, because there's no way that one country should dominate all these other countries. And the only alternative to that is coalitions, which is what we had until very recently. For instance, in Europe, you had Britain and Prussia and France as these 3 dominant powers, but none of them wanted any 2 of them to be able to dominate. So Britain would basically come in on the side of whoever was the weakest of those 3 and try to maintain a balance of power that way. And in a multipolar world, that's kind of what happens. You get a lot of jockeying for influence and shifting alliances and stuff like that. And yeah, it'll be very messy. And the guys who will end up with power, Russia and China, for instance, they're not nice guys. And there's no reason to think that they're going to be peaceful partners in every way, in every situation going forward. So it's going to be messy for sure. But it's inevitable. There's no way the US was going to continue to run the world without fighting a nuclear World War III with the other rising powers. That could still happen. But in the absence of that,
right? Though let's knock on wood, it doesn't.
Yes, multipolar world is better than that, And those are our real two alternatives. Having the US just stay in charge without having to fight for it is highly unlikely. So the world of the future, where we have maybe India and a coalition of the global South, for instance, and then the BRICS countries in Eurasia being the dominant power, and then the US in the Americas being a dominant power, and those 3 groups all trying to maintain peace with each other, trying to get what they can without starting some kind of world war. And there's no guarantee you succeed when you do something like that. It didn't work for Europe. They ended up with 2 world wars. And it's completely possible that war is part of the future, but it's also, that's how it is. There's not going to be a world in which humans are peaceful animals and we never cause trouble, and we never are greedy, and we're never territorial. We are just those things. And that always translates to a national and a multinational level. We're just those kinds of creatures. So the world will be messy. And these coalitions that are forming now might not hold. We just can't know that. But the fact that we're heading in that direction is pretty much undeniable. We're going to form other coalitions that challenge NATO and the US, and there will be a measure of success for the new guys as they come along, because they've got a lot of resources that give them a chance of succeeding. And there's going to be a lot of setbacks for the old guard, for the US and Europe especially. So that's all going to happen. It's going to be incredibly messy. And you're right, though. This is it's a depressing prospect if that's all the further that we take it. But it's also an investment thesis. This kind of a world is one in which you can make a lot of money if you position yourself so that you're in the stream that's moving furthest and fastest. In other words, if you own the right things at the right time, there's a ton of money to be made. And I think the commodity complex is an interesting place to be right now, because it looks like their prices are going to be pushed up, and it looks like, say, a mining stock that has good reserves in a fairly stable locality is going to see its margins just blow out. And because of that, it'll be a good investment. So the question is, which gold and silver miners should we own? Which oil companies? Which uranium companies? These things are going to be huge winners, and they're going to make life-changing money for a lot of people. And we just have to figure out the timing and then the specific companies. And that's an interesting intellectual challenge that if you get it right, can make you a lot of money. So if you focus on that instead of all the crazy stuff that's going to make commodities become more valuable, then it's easier to not be depressed by all of this. You keep the prize in mind, which is a lot of extra capital for you at some point in the future. And you can approach this with an open mind and sleep at night.
Okay, so I'm trying to find a chart that you sent over this morning, John, so I can show it up here, and it's the price of the ratio of the S&P to commodities, which I think really proves your point. I'll pull it up in just a second, but yeah, as we wrap up here, that one, but I'll put it up on the screen so everybody can see it clearly. I want to ask you to expound on how to get the timing right, and where to be looking, and how to identify some of these potentially great commodity-based plays. On our way to that answer, could I ask you to address two things? One is we're talking about de-dollarization and other currencies, stepping in to replace the dollar in trade and whatnot. Right now, it's still an all fiat world, right? You mentioned that the BRICS coalition may eventually introduce a currency that is backed by commodities. So if you could just opine for a moment about, in this mix, are we also potentially seeing, I want to say the death of fiat, but a competing currency that is not fiat emerging? And then secondly, if you expect the dollar to weaken here for all the reasons we just talked about, man, you would really expect to see gold as priced in dollars really start to shoot the moon. And gold has found some footing here, right? It's back at about $2,000 an ounce right now. But I would think if the world really began thinking that what you said is likely to happen would happen, we'd start seeing the gold price priced in dollars really start running away now. We haven't. Maybe it's just a matter of time. So I'd love to get your thoughts on gold's reaction to what we're talking about here too.
Well, yeah, gold wins twice. One is that people might be setting up commodity-based currencies where gold is part of the backing. And the other is that people are going to be terrified by the instability of the financial world, especially for the old fiat currencies like the dollar and the euro. And they're going to want to buy things that provide safety. And gold is that's the main thing you do when you're terrified. You buy a bunch of gold. And that is a very tiny little door to get through for the amount of global investable capital that's out there. There's 30 some trillion dollars of global investable capital that, and that dwarfs the amount of gold that's available in the world. Because remember, I think there's like $10 trillion worth of gold, but most of it is in central bank vaults. So it's not available. So the amount of gold that you could get, if you're somebody who is suddenly terrified and wants to convert a bunch of dollars or euros or yen to gold, there's not going to be that much out there. And just in the last few years, we've seen all kinds of different assets capture people's imagination and then just go parabolic. And there's no reason why gold can't do a GameStop or a Bitcoin or something like that. Just can't suddenly capture people's imagination and suddenly be bid to the moon. And if we were going to do something like back, for instance, the US dollar with gold in order to save it from just spiraling down into the abyss and disappearing, and we were going to back maybe 40% of outstanding dollars with gold, that would take $10,000 gold, $10,000 an ounce gold, and maybe a lot more. There are estimates running up into the $20,000 and $30,000 an ounce range. So yeah, you
sorry to interject, like but do you see the U.S. having to intervene and begin to reback the currency with something like gold as probable in the arc of what you see coming?
Well, the U.S. has to do something. It can't stay on this course. And so the question is, what will it do? And the least painful thing for it to do, I mean, a lot of guys in charge of the U.S. government right now would like to just go out and take all the commodities that we need to back the dollar. Assuming we don't do that, then the monetary reset scenario is the thing that makes the most sense. And that's incredibly painful for anybody that trusts the government and holds a lot of dollars, but it's the least painful scenario otherwise. And what you do is then, yeah, you just go back to some kind of a gold backing, which was the dominant monetary system for most of human history, all the way up into 1971. Currencies were backed, and therefore their supply was controlled by a relationship with gold. And if we just went back to that, we'd have to do it with a massive dollar devaluation, but that would give us a stable monetary system again. And so, if these guys have an ounce of common sense when the crisis really gets going, that's the scenario, that's the solution that they'll look for. So yeah, I could see the dollar, if at that time we're run by rational people, be back on some kind of a commodity standard, probably gold, but maybe a big basket of other commodities, something like that. So it's okay. Completely possible.
Assuming for a second it's gold, we just get this question all the time, so I'm gonna front run the questions, which is if the U.S. government were to do that, folks think back to Franklin Roosevelt, where he basically sort of forced people to sell their gold back to the government. Would you see something similar, or would you not, because right now gold isn't money?
Well,
isn't U.S. money?
Yeah, it's completely possible that if we went back to something like a gold standard, that the government would try to take the gold away from people. And that's just that's just how we roll here in the U.S. We have no trouble with authoritarian solutions if we can get away with it. And
do you think they would take it, or do you think it would be a like back in the 30s, like it would be a sale, like, hey, we're repricing gold, we'll give you the whatever rate for gold, but there's going to be that's the carrot. The stick is, if we find you have it and you didn't give it to us, you're going to prison.
Yeah. Back then they said, well, yeah, we'll pay you the old exchange rate for it, and some people handed in their gold. Most people did not. Most people back then just kept their gold, because it's really hard to figure out. I mean, how do the police find out if you have some gold in a coffee can buried in your backyard?
Right. I mean, that's one of the beauties of it. Yeah.
Now, but when that happens, if you don't turn your gold in, you become a criminal. So that's something you need to think through, because you're breaking the laws of your country, and presumably there's going to be a penalty that's commensurate with how serious the government is about this whole thing. So the solution for that is to definitely own some gold, but own more silver than gold. because silver is an industrial commodity. It can't really be confiscated because the solar panel guys will, buy a bunch of congressmen and have that rule changed in a heartbeat. And so silver will tend to go up, maybe even more than gold in the kind of scenarios we're talking about. And it will be useful as money. You'll be able to go to the farmer's market with an ounce of silver and get all the veggies you need for a month when the time comes. So that's a solution that I think makes a lot of sense in this world. If we're worried about going back to a gold standard and confiscation and ownership being made illegal, things like that, well, just focus on silver, and you'll be mostly immune to government interference, and you'll still be able to use, when the time comes, that can be a functioning kind of money for you. Whereas gold is a little tougher, because if an ounce of gold is $10,000, you're not taking that to the farmer's market or anything, even though $10,000 won't be what it used to be. But still, it's harder to use. It's like trying to spend $1,000 bill now. It's tougher. But silver is going to be the equivalent of $100 bill or something like that, and much easier to use.
And the mining stocks may make sense in this scenario too. I mean, one, if gold gets repriced upwards, obviously the mining stocks would get repriced upwards by some multiple because they're a leverage play. But also, it's not confiscatable. So unless the government were to nationalize the mines, you'd be able to have exposure to the upside in gold without having to worry about some sort of confiscation of your asset, correct?
Yeah, at least for a big part of this process. Towards the end, there could be windfall profits taxes on mining companies that are making a lot of money, and which lowers the value of their stocks. Or there could be flat out nationalization, like you said. So the mining stocks, I would say, would be something that you ride until things get really scary and maybe authoritarian. Then you sell them, and then you go into physical stuff. You buy a piece of farmland, or you convert to silver coins or gold coins or whatever, and you buy things that are harder for governments to get at, because it's no trouble for a government to see that gold miners are making record profits and their stocks are going through the roof, and come in and say, well, why should you have all those profits when everybody else is suffering? That's easy for a government to rationalize.
Right. Well, and very recently we were hearing murmurs for doing that with the oil companies, right?
Yeah.
I don't think it actually became any legislation, unless I'm forgetting something. But for a while there, it was definitely being trial ballooned in Congress, right?
Yeah. And if oil had stayed high, if oil had gone to $200 a barrel and stayed there for a couple of years, it would have been probably unstoppable. The government would have come after those profits somehow, which is, it so defeats the purpose of having markets when you do something like that. Because what prices are basically a signaling mechanism that tells entrepreneurs and other companies what to do with their capital. So when something goes up, it tells you to go get more of it. So if oil would go to $200 a barrel, yes, that would be painful for a couple of years, but it would also lead to massive exploration and development on the part of the oil companies, which would produce all the oil that we would need, and prices would go back down. And that's just how markets work. So when you interfere with them the way governments do, you kind of hamstring the whole concept of capitalism, which is what we have now. The price of money is controlled by the government, and all kinds of other like bailouts and things like that, or things are happening that basically interfere with the pricing mechanism, so that nobody knows how to allocate capital. So we get malinvestment. So we have all these future bankruptcies that we're just building into the system now. And the whole windfall profits thing falls into that category. But that doesn't mean they wouldn't do it. They probably will. So when you're most excited about your mining stocks, that's the time to look around and see what the political situation is becoming, and then decide whether now is the time to take the profits that you've got and move into something that's harder to steal. And so, like I said, it's an interesting intellectual challenge, because you not only need to make the right bets, you need to make them at the right time, right, and then you need to shift gears at the right time too. So to do this right, you've got to be a political scientist to an extent. You got to know what's coming from these big, incompetent, panicked governments at any given time. And that's interesting theater to watch all of this stuff. And if you've got money on the line, that makes it even more interesting. So I think it's possible that this is going to be, for a lot of people, it's going to be an entertaining time. It'll be scary, but the stakes will be high enough, and your control over your situation will be real. So you'll be empowered and you'll be excited. I think this could be a fun time for the people who don't trust the world's governments. Those guys, they're lost. There's nothing that we can really do for them. But for the people who see clearly, mistrust the people in charge, and are willing to bet against them, this is a time to make a ton of money. Watch the movie Big Short, The Big Short. That could happen on various scales for millions of people out there if people are paying attention.
All right. Well, look, John, first off, open invitation to come back here anytime over the unfolding, next couple of years as you see things, as you see identify opportunities given where, the puck is heading in all of this. If I intuit from your comments, it sounds like you're saying, look, if you're just kind of like a good citizen and just sort of move with the herd where the government's telling you, you're probably going to find yourself up in this sort of, financial slaughterhouse at some point. But for the people that poke their head up above the herd and are willing to bolt when they see opportunity, they can actually maybe make some fantastic returns in a type of market like this. Let me just put up this chart real quickly so people get a chance to see it that we referenced earlier. And then, John, I'm going to start taking some questions from the audience. But I will ask you real quick before I do, just to give any counsel you have for people that are excited by your sense of, hey, there is a chance to make some good money here if you look at some of these sectors that you were talking about. If you could just sort of share your process for how you identify what good opportunities are in the mining sector and some of these other commodity sectors. But real quick, let me just show this chart. It's from Marin Katusa. I think he calls this the most important chart ever, or of the decade, something like that. And what this is it's an index of commodities versus the S&P 500, a proxy for the general market. And you'll see that at times of great scarcity or shortage or crisis, commodities, a big value, a big premium was placed on them. Those are the red peaks you see here on the chart. We are down now at a level, basically the past couple of years have been the lowest since the 70s. In fact, they're even higher than the 70s were. You see that things have ticked up a little bit here. But still, even though they have, we are at a generational low in this chart. And so this really is the opportunity, which is if you want to buy low and sell high, we are in the buy low period for a lot of key commodities. And John just made, a great argument in this whole discussion about how commodities are going to kind of be, that's going to be the axis that the world economy revolves around going forward from here. And the West enjoyed first access and you could kind of, demand its price. That era is ending. And so for those of us in the West, at least, commodities are probably going to become a lot more dear than we have been used to over the past, I don't know what this is. This is my lifetime, 50 years.
Yeah, Adam, that is your lifetime right there, right? And it's also
that's my lifetime right there. Exactly. I was born like 3 weeks before Nixon took the dollar off the gold window. You shut the gold window.
Yeah.
So I'm one of the last humans on Earth, before who lived under a quote gold standard dollar. Yeah.
Yeah, it's your lifetime and the fiat dollar's lifetime on that chart right there. And what that chart shows is that if you had shorted stocks and gone long commodities when they were at their lows, you made a ton of money in a very short period of time. And we are at another one of those inflection points. So if history repeats, as it has for the last 3 big financial cycles, then there's your play, load up on commodities and just ride them up. And then once you've got the broad scenario and sector, taken care of. Then you start picking specific commodities and specific mining stocks and other related companies within the commodities that you like best, within the broad sector that you like best. And so you've got a lot of work to do besides just deciding that commodities are the thing to be in. But you're definitely on the right side of history at this point, based on the fairly recent past. So yeah, I think that a ton of money will be made if history repeats, and it's right there willing to be taken. And the only question is, do you want to go really aggressive and short stocks at the same time you're going long commodities? Because that would have been the play. And that, there's a lot to be said for that possibility. If you're reasonably financially sophisticated and risk tolerant, then you can do a lot of really interesting long short combinations in a world like this, where stocks are wildly overvalued and commodities are wildly undervalued. But even if not, just buy the best commodity related stocks and then just ride them up. So that is a very optimistic chart right there, because it tells you pretty much exactly what you got to do to make an extremely large amount of money in a reasonably short time. So yeah, that's a good starting point for almost anybody.
All right. So for people who, here, I'll pull up Tom's question here. But let's say people who aren't, John, I know you've followed the precious metals mining sector for a long time. So you have a basket of companies that you have researched and put together. But again, you've been following the space for decades, right? So for somebody that doesn't have, at least yet, your background of experience, what do you think is the best way for them to get started? Should they be buying the ETFs? Should they just be buying like the top tier players in the sector? Or should they be maybe subscribing to a newsletter of somebody who has decades worth of experience and is cultivating like a top 10 type of list?
Well, there are different ways of approaching this. And one is if you just want the exposure and you're not all that interested in really sitting down and learning a bunch of stuff about, say, uranium stocks or something like that, then you can just buy a well-run ETF, and that'll do it. That'll give you the exposure to that sector, but you'll get the winners and the losers in that ETF.
You'll capture the beta, right?
Yes, yeah, and so, with something like that chart you just showed, just the overall progress of the sector is good enough. If that's what you have and it goes up 8 times in 10 years, you're one of the best investors in the world just from doing that.
Right.
So that's the easy, simple way of getting exposure and then just going on with your life. Make sure you look into the quality of the ETFs that you buy, and they should be fairly big. They should be run by companies that have a presence in the financial world. And if you want to dig a little further, you can go into the prospectus and make sure that they don't have any landmines in there that let them screw you over and get away with it. Now, the next way to do it is to sign up for a newsletter or something like that. There are people in all the commodity spaces who have been publishing newsletters for a long time, and who have a record of finding the diamonds in the rough in the sector that go up not 8 times but 80 times or something. So one winner, if you get it from a newsletter, more than pays for the cost of the newsletter. And I think that's a great way, first of all, to educate yourself, and second of all, to find the unusual stocks in the sector. You don't have to buy Exxon if you want to be in oil. There's lots of like mid-tier oil companies that you've never heard of that might go up 3 or 4 times as much as Exxon in good times for oil. And I'm doing kind of something like that with my Substack, which is at rubino.substack.com. And it's a newsletter that is geared towards actionable stuff. In other
How do you
words,
like that, John? I don't know if you can see it, but
I see it. Good, thank you. I appreciate that. But yeah, we're setting up portfolios of commodity-related stocks and looking at how to short different things and whether it makes sense. I'm trying to figure out how to short Japan right now, and I haven't found a lot of stuff that really is worthy of a post, an entire post. But that's one that's coming. As soon as I figure out the right ways you can bet against Japan with all of their financial problems, that would be a good thing to try to do. The final thing is to, after you've done the newsletter thing, you've kind of educated yourself, then really start doing your own research, really dig into these things and figure out which, little companies you want to watch the CEOs videos of, and you want to do the financial analysis and keep up with their news reports and everything. And that's fun too, because once you have 20 or 30 little stocks that other people don't know about, you kind of get attached to them. So they become kind of sort of your family, and get a few of them right and they can make you a lot of money. So you can basically start from the extremely lazy but also pretty effective part of the spectrum and just buy some ETFs, or go all the way out to digging into it and becoming kind of your own personal expert on things.
Yeah, I would caution people that to get to that end state, you want to draft off of experts beforehand, right? You want to look over someone's shoulder. You want to understand why the researchers are picking the stocks they are, and like you, over time, as you get more and more experience, then you can kind of start being your own portfolio manager. I want to caution people. One thing they tend to do is they might subscribe to somebody's newsletter for a month, right, to get the top 10 picks, and then they put them in their portfolio, and then they think, I'll just own those stocks. The thing is, for a lot of these companies, especially the smaller ones, there's a lot that changes. Like I said, let's take a precious metals miner, right? If you're like an explorer or developer, right? There's new drill results that come in. There's something might happen with machinery, or there's a new shaft that collapses and needs to be rebuilt or whatever. But there are things that can happen that can really change the prospects of the company one way or another. So these are not necessarily like set it and forget it stocks. If you put them in your portfolio, you really do have to keep up with them, news and all that type of stuff. Looks like we just lost John. Hopefully he'll jump back on in a minute. But just to finish my point here, folks, there's a real risk if you take that. I'm just going to subscribe for 1 month and get their picks, and then I'll just put it in my portfolio and I'll just forget about it. Because they're so dynamic, something that looks like a great company one day can maybe in a month or two look like not a great company, because again, something like bad drill results might have come in or something like that. While we're waiting for John to come back, if he's able to come back, I do want to remind folks that we had the Wealthion conference 2 weeks ago, and Rick Rule gave just an incredible presentation at that conference, where he shared over 30 individual stock tickers of stocks that are in his personal portfolio on the commodity side, that have his attention, that he likes the most right now. So he went through and provided, I don't know, probably 10 precious metal stock, 10 stocks, 10 energy stocks, other mining stocks. He shared 1 or 2 agricultural plays. So if you're looking for a good place to get started, that is a great place to sort of see where a true natural resources investing expert has his attention. And if you're interested in purchasing the replay from that conference, the URL is wealthion.com/conference. Here comes John back in. Hey, John. I also, folks, just want to recommend a few other newsletters to check out. So obviously go to John's Substack, and I'll put up that URL again in a second. Jeff Clark, who's been on this program a lot, he does focuses on precious metals, and he has a free service over at thegoldadvisor.com. So you can go check that out. There's Lobo Tigre. He has a newsletter. In fact, he was sort of Jeff's mentor when Jeff first got into the space. Brian London, who's been on this channel, runs a really highly respected newsletter. It's been out there forever. It's called Gold Newsletter. So if you go to goldnewsletter.com, I also think John Duty still publishes a mining stock newsletter as well. So there are a bunch out there, but those are at least a few to go check out in addition to John's Substack. All right, John, glad we got you back on here. We're over the hour, so we're going to wrap up relatively quickly anyways. Let me see if there are any other questions here. Somebody is asking about Brent Johnson's dollar milkshake theory. Are you familiar with that?
Yeah, generally.
Okay. Which basically is because of the whole euro dollar market and the fact there are more dollars outside the US and all that stuff that basically almost mathematically it's very hard for the world to wean itself off dollars because there's just not a currency that can step in and replace the volume of dollars that are out there anytime soon. He's asking if you agree with the theory or not, and certainly what we're seeing. I know Brent's been very busy tweeting over the past week as all these de-dollarization stories have been coming out, and I should probably have him on to tell his side of the story. But I'm curious, what reaction do you have to the dollar milkshake theory now with these recent developments in play?
Well, that's kind of how it has worked in the past. Where whenever there's trouble in the world, money flows into the dollar. Even if we cause the trouble, the dollar still gets stronger because people perceive the US to be the safe haven and the dollar to be the safe haven currency. And there's a ton of dollar denominated debt out there, which requires dollars in order to be paid off. So yeah, there's huge demand for the dollar. And the US capital markets are by far the deepest and most liquid in the world. So yeah, the dollar will continue to be a real thing, and it'll be used in international trade, and it'll be less than before, but still a place where people park their excess savings and things like that. But the trend will be in the wrong direction. So yeah, the dollar definitely has a use case out there. It'll still be used. There will still be demand, but the trend is going against it. So, whether it happens right away that the dollar just falls off a cliff, or whether we just have unacceptably high levels of inflation for a few years and then it falls off a cliff, who knows? But I think the general trend now, as we talked about at the beginning of this, is now away from all fiat currencies, including the dollar, and towards commodities and commodity-backed currencies. So timing is impossible. There will still be probably ups and downs for the dollar on the way, but the trend is definitely against not just the dollar, but the euro and the yen as well. And that's not going to change. There's nothing that can really be done short of some kind of a big war that the US wins to turn that trend in the other direction.
All right. Well, look, I hate to wrap it up here. We've gone over the hour. So, John, I got to let you get back to your writings. So as we begin to wrap up here, John, I want to let you just give any parting words of advice to folks. And again, tell them where they can go to your Substack and what they can expect to get there. Real quick, as John begins to do that, folks, we do pull this live this software to be able to record these live out from time to time when we have a breaking story like this, and we don't want to delay getting the information to you by having to edit the video and having it come a day or two later, or maybe even in the following week. So if you like this format, would like to see us do this again on timely topics like this, just let me know one way or the other in the live comments here. All right, so John, you have the new Substack. It's been up and running for a couple of months now. From everything I hear, it's going gangbusters. I subscribe to it, and I eagerly await every one of your new postings. For folks that are interested in following you and your work, is that the place they should go?
Yeah, rubino.substack.com. And yeah, it's been a fun 3 months. It actually went live the day you and I did our last interview before this one on January 3rd. And since that time, it's been, it's been a nice community that is growing up there. And they're sending in a lot of ideas, and I'm kind of running with a lot of them. And yeah, I think the whole actionable currency crisis portfolio idea is something whose time has come, and that's what we're trying to create over there. Is exactly which investments that we should all be in, and we're setting up portfolios where I own everything that shows up on the portfolio, and before I sell it, I let anybody know, and or let everybody know on the Substack. So we're all in it together. So
Great.
so far so good.
You're putting your money where your mouth is, literally.
Yeah, exactly.
All right, great. Well, folks, there's the URL to sign up for John's Substack. Just a reminder, if you want to get those Rick's picks, go to wealthion.com/conference. As I talk about every week on this channel, a huge part of our mission here is to help people become more financially literate, but then empower them by connecting them with resources that can help them put all these insights into action. If you're looking for ideas and guidance on how to put a lot of what John talked about today into action in your portfolio, definitely reach out to your own personal professional financial advisor if they take into account all the risks and issues and macro trends that John talked about here. If they don't, or if you just like a second opinion of one who does, feel free to talk to one of the financial advisors endorsed by Wealthion. You just go fill out the short form over at wealthion.com, which I have here somewhere. Oh, right up there. Wealthion.com. It's totally free, doesn't cost you anything. There's no commitment to work with these guys. They'll just listen to your personal situation, give you their advice on what they think you should do, and you can go take that back to your existing financial advisor. If you're a do-it-yourselfer, you can just take that into account in terms of what you do. Or if you like those guys, you can continue talking with them. But they just offer it as a public service to help people be more informed. John, it's always great to have you on the channel. Thanks so much for coming on and doing it live here with me, especially soldiering through the technical issues that we had there. But really appreciate it and look forward to having you back on the channel soon.
Thanks, Adam. See you.
All right. And everybody else, thanks so much for watching.